Thank you for joining me. I'm Alex, and I would like to have a look at Panasonic. So, what they do is they build batteries and other electronics. They actually build a whole lot of stuff in a whole lot of fields, and they're a very international company and produce a lot of stuff for a lot of companies. But kind of the segue into this was the batteries that they produce for Tesla, and because of that, they currently produce almost half of the world's output of lithium-ion batteries. So currently, currently the price per share is $8.30, which gives the market cap of about $19 billion and a PE of about 9. And already that sounds pretty enticing to me. So, dividend yield 3.43% with a payout ratio of 26%, which is also very enticing. All these stats is pretty amazing, and obviously the battery side of their business has ways to go. So, currently revenue is basically even year over year, up a fraction of a percent. Earnings $2.6 billion, which is up 20%, which, can never be a bad thing. Total assets $55 billion, total liabilities $37 billion, and total stockholders' equity of $17.5 billion, which is up 10% from the previous year. Take all these numbers with a slight grain of salt because I had to convert the currency from Japanese yen to US dollars. So, I will not guarantee that there's no flaws in my numbers, but I think they're right. So, the battery business of Tesla brings them a lot of money, but not really a lot of profit in the past few years because it's not that Tesla is cheap per se. It's just that they're currently driving down the price of batteries so much that Panasonic, in their partnership with Tesla, is not making a whole lot of profit off of selling their batteries to Tesla, which kind of strains their relationship a little bit. In the future, I would expect them to go their separate ways and have Tesla produce their own batteries and have Panasonic produce batteries for pretty much everyone else. So obviously, Panasonic, big player in the battery market, would be able to supply, GM or Ford or whoever else wanted their batteries. Probably a Rivian because I think they have a fairly similar battery pack to Tesla. So obviously, Panasonic also makes a lot of other form factors for batteries, complicated things, not going to get into them, but in the grand scheme of things, their battery business is very small compared to all the business they are doing. So I don't think that is going to affect them in a huge way, especially with the current demand for batteries and everyone switching to EVs. So would not expect Panasonic to go anywhere at this time, and I think that they have a pretty good future ahead of them, even if their partnership with Tesla falls apart, which I believe it will. So risk factors are Tesla batteries in the very long term, but only for their battery business. They have a lot of other stuff that will be sold to car manufacturers regarding autonomy, regarding audio, regarding a lot of other stuff. So I think that in the long term, Panasonic will grow despite not working with Tesla, which I think they will not be doing in the long term. So I don't think that they have many other risk factors at this point, especially with demand for pretty much everything they produce growing. And so I think that the PE is extremely cheap, considering that I see them growing long-term quite significantly. I think the dividend yield is quite good and the payout ratio as well. So I think that if you're a dividend investor, I think this is a pretty good stock to buy into, especially to diversify. Panasonic itself is very well diversified, so I think that even for a fairly big position in your portfolio, this would be a pretty good stock. For a growth investor, I don't think that this is the kind of stock for you, but for a value investor, pretty much everything looks pretty good about this company. The PE is very good. The dividend is very good. The payout ratio is very good. The balance sheet looks pretty good. So if you're a dividend investor or a value investor, I think you should strongly look into this company, even though it's a Japanese company and, some people don't like investing outside of their comfort zone. But I think that this is a pretty good company for those who want to diversify into other markets. So for a dividend or a value investor, strongly do look into this company and decide if you want to invest in that. And that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.